Well, is Blackmore Capital finding value in beaten up stocks? If so, where? Well, let's go and find out. Marcus Bogdan joins us now for an update on positioning as the market stubbornly hangs around that 7,000 point mark. Marcus, welcome back to the program. Great to go and see you there. Look, what's on the radar when it comes to opportunities at the moment?
Thanks very much, David and Cara. Well, the market was very much polarised in January, and our focus is really looking at those sectors that underperformed quite dramatically in January, and we believe that the medium and long-term fundamentals of those sectors look encouraging. The two sectors for us that stand out at the moment are in consumer staples and healthcare. So you had very strong performances in energy and materials. But we now feel that the pullback that we saw on consumer staples and healthcare, and that was driven primarily through Omicron and the disruption that had on those business models, on supply chains or elective surgery being closed. And so now I think that those issues are starting to recede. And those two sectors, the supermarkets and a broad cross-section across the healthcare sector, are now looking far more compelling on a medium to long-term view.
So name some names for us, Marcus, if you can, some of those in the consumer staples and the healthcare sector that you have in the portfolio at the moment.
Well, I think both Coles and Woolworths have been sold down. I think their sales will be elevated through this period. The cost side will be higher, but I think that ultimately higher inflation will be a beneficiary to their profits, and I think that they'll continue to deliver good sales growth momentum. The other areas that have been sold off quite materially have been Endeavour, the drinks business, and also Wesfarmers. So that's on the consumer staples side. On the healthcare side of things, CSL, again, another pause in plasma collections in the US, where they've had issues there of people being able to go to centres and staff shortages. I think that they're very much short term. I do think that their acquisition in Switzerland, which is going through at the moment, will be EPS accretive. And then the diagnostics through either Integral or Helios or Sonic, and then the private hospital systems, primarily through Ramsay, are now looking fundamentally much better priced, and I think offer good long-term value.
In the banking space, interesting at the moment, we're talking about rate hikes. I was going through some of the lending data as well by individual lender. National Australia Bank really going hard when it comes to the mortgage market at the moment. Is that something that's on the shopping list as well?
Yeah, I mean, NAB's operational performance has definitely improved in the last several months. They're getting traction on mortgages, they're getting traction on the business side of things, and they are Australia's largest business bank. So I think the fundamentals for NAB look encouraging. The valuations don't look demanding in terms of a PE or price to book. Capital positions for the banks look strong, and we are seeing more and consistent and persistent growth in both mortgage and business lending. And I think this year there'll be a focus on dividend yields, and a dividend yield of 5% fully franked, I think looks attractive at these levels.